I'm just going to welcome the top management of TVS Supply Chain now. Ravi Viswanathan, Managing Director of TVS Supply Chain, and he's got his global CFO, Mr. R. Vaidyanathan. Gentlemen, thank you for joining us. Ravi, these are uncertain times for any logistics company. Tariff, war, now rain, earlier than anticipated, clog roads. What's happening to business, and walk us through what transpired for the quarter gone by.
So, you're absolutely right. There's a lot of volatility, especially in the, I would say, the trade policies. I'm here to talk really about the company, the FY25 performance. We grew our revenue by 9% year on year. So it's been a spectacular performance, given the fact that there was significant macro headwinds throughout the year. It is not just all the things that you called out now. It's also about the issues we had with the Red Sea and all of that, which still continues to persist. And on the back of that, we've delivered a very strong year, delivering 9,996 crores of revenue at about a 9% growth. The quarter also showed pretty good numbers. Our segments grew very well, both the ISCS and the Network Solutions segment. What is most encouraging is the fact that we continue to win very marquee customers. Our global Fortune 500 client base has improved. We added 24 new F500 customers this year. I would say the best year in terms of acquisition of that high quality customer base. Our F500 customer list, swelled from 78 to 91. So overall, I would say a very strong year from a growth perspective. The growth has been fairly broad-based, I would say, and we continue to look at the forwarding business with very carefully. I would say there's extreme volatility as we speak, and it's something which we are keeping a close watch on. We had earlier spoken about the fact that one of our subsegments, the integrated final mile, was on a strong recovery path. So I'm glad to say that it turned positive in Q4, and we are absolutely bullish going into the next year that we will continue on this momentum, and we will stay very focused on being a very profitable company as we exit FY27 12 months from now.
So Vaidyanathan, coming on this, because, if I look at the numbers, in Q3, you had targeted for a better, next quarter and were expecting to bounce back as well. But now Q4 has ended in a 4 crore loss. What is it that we can expect for FY26? Any trajectory that you think you can clock in?
I think it's important for me to point out that we ended Q3 with a negative PBT of 15 crores. And we have turned it to a plus 13 crore profitability in Q4. So it's a very strong performance from a PBT perspective. We have bounced back better than expected in Q4. We had called out headwinds in Q3, and we expected Q4 to come back to normalcy. We saw significant volume increases in the Integrated Supply Chain Solutions business. Integrated Supply Chain Solutions volumes grew by almost 9%. So I would say Q4 has been a very good quarter, and it sets us very well as we exit FY25 and enter FY26. So we are bullish about the momentum. We are confident of a double-digit revenue growth going forward. We have a very strong pipeline. In Q3, we had mentioned that we are on the verge of a very large contract in the UK. I'm glad to say that we closed it with a large retailer in the UK. It's a 1,000 crore 3-year contract. So I would say a very strong revenue performance, and the outlook going forward is very bullish. We've turned the corner in terms of PBT. I would say momentum is very strong. We had 3 quarters of positive PBT last year, Q3 being a sole call out. But going out of Q4 and into FY26, we believe that we have a very strong momentum. The only place I would watch out is, like you rightly pointed out, the forwarding business, the freight business, the tariff and the macro impact in the trade policy. So the supply chains definitely have been disrupted, especially when it comes to movement of cargo and the freight services. But we are keeping a close watch. It's almost like day and night between March and April, as we sit in May. So it's very volatile, and we hope to go up ride the upwinds, hopefully. But Vaidi, of course, has taken over the CFO. He's come up with a whole lot of opportunities for us to maximize our cost. And maybe I'll let Whitey speak more about it.
Yeah, I think what we see is that there is significant opportunity for us to take cost out. I think we've already committed in Q4, we have incurred a one-time redundancy cost, and we think that there is further more opportunities for us to reduce the cost further, and we will continue this program for Q1 as well as Q2, and we expect that this will help us to improve the profit trajectory as we go forward. And especially some of the areas that we are targeting are especially on right sizing, right shoring, moving jobs from high cost to low cost locations. All these things will help, I think, will help us improve the profitability going.
All right. Hi. Good morning, gentlemen. And this is Shrishti also joining in. But with Mr. Vaidyanathan, since the outlook remains very positive for FY26 vis-a-vis what we have seen in FY25, if you can help us with the numbers that what number is the company targeting to, or rather aiming to get onto the bottom line? And in bottom line, I'm referring to not just the PBT number, along with that post after taking the tax implications, any number that you are targeting, because for now the number stands in the negative zone. Can we expect this number to be in double digit?
Yeah, Srishti, I think as I said, by FY27, our target is to move towards a 4% PBT, and we are committed to achieving that 4% PBT. And obviously, there are some tax where we need to work on improving the tax optimization, which we will do in FY26 and FY27. But our immediate priority is reach towards the 4% PBT by FY27.
Along with that, in Q3, I had already flagged off that a major UK contract was delayed till Q1 of FY26. I guess you did mention about that in some of your previous answers. But if you can help us with more understanding on that front, how are you working on the ways to absorb the impact? How did you actually absorb the impact, and what is the implication going ahead?
So let me say this, and I'll let Whitey speak about the impact. And the contract basically has two components. One portion, the customer has changed the strategy to bring it back home. It means he's insourcing slightly outsourced business. We'll continue with one part of the contract. We had earlier spoken about the impact on both the revenue and margins. They are not material considering the size. It's a 10-year contract that we have signed, so on an annual basis, it's not a material number. But Whitey, you can add more color to that.
Yeah, so probably as part of this strategy, we have taken a one-time cost in Q4. But I think, as Ravi mentioned, our partial exit will not have any material impact on our revenue, and our pipeline is very strong to compensate. We don't see any big material impact on account of this partial exit.
All right, gentlemen, with this, we let you go. And that really appreciate you taking the time out and speaking with us